Hey folks, Dan Frio here, the rate update. Today is January 5th, 2022. The jobs numbers just came out and they're double what was expected. Don't go away, we're going to talk about that and more. Hey folks, the job numbers just came out for this week. I want you to see those. Look at it. Private jobs total 807,000 in December, more than double as expected. So let's listen to CNBC talk about this, and then when we come back, we're going to wrap it up in a nice bow for you.
Becky, 807,000. ADP reporting that the private payrolls for the month of December rose by 807,000, revising down slightly. It's stronger than the BLS number for November by 29,000 to 505,000. Looking at the details, you can see this number is more than double the estimate. Total private payrolls ADP was estimated to be 375 by the street. It's coming in at 807, with very strong gains in the service sector, up 669,000, and also good gains in the goods sector, 138,000. You can see the non-farm payrolls, 422,000, is certainly light compared to where the ADP estimate is. Looking at it by business size, large businesses did the bulk of the hiring, up 389,000, but still good growth among small and medium-sized businesses as well. 204 for small, 214,000 for medium-sized businesses. And then looking at by industry type, well, you can see you have the job growth where you might expect it. 246,000 in the leisure and hospitality sector, trade, transport, utilities 138, professional business services 130, education, health services, and manufacturing also doing well. It is worth here reading a quote from Neela Richardson, chief economist at ADP, who wrote, "December's job market strengthened as the fallout from the Delta variant faded, and Omicron's impact had yet to be seen." You remember I reported yesterday that there is some sign in some of the high-frequency data that maybe the Omicron showed up in the jobs data as soon as the December job report, but certainly thereafter, and we'll wait to see. I would not have been surprised by this number if we didn't have Omicron, because I thought the November number was well understated. I thought that there was some catch-up to be done. But now there's a wild card, and if you want to ask me what the outlook is, I would say I'm going to be paying very close attention to what Dr. Scott Gottlieb has to say later in this hour to figure out what the heck is going on with the economy.
Okay, so as you can see, the number is double what was expected. Okay, so what's going on here? Let's unwrap all this. So if you watch some of my videos, and I'm going to show you some of the stuff right here, you can actually see I have over 1,000 videos. All right. Over the past year, I've been saying this. I've been consistent with this analogy. The excess stimulus to all the families is hurting the economy in the long run, and I'll explain that in a minute. Forbearances, when those stop, and they've stopped now, okay, you're going to see probably 500,000 houses come on the market in the next 60 to 90 days. Okay, I've been laying out this plan, saying come December, January, you're going to start seeing a lot of this come into play. I've laid it out like a roadmap. Okay, this is starting to come in, so you're going to start seeing homes being added to the market. You're already seeing the jobs numbers coming back. Okay, so let's talk at that. All right. And another piece of this equation, what I've been saying is, why is this happening? Well, the excess stimulus that everybody was getting is over. And a lot of people saved up a lot of money during that time because they were making more than they were making previously. Okay, so I know some people out there are not. The mass majority of people, that is it. It is found out by studies, savings account studies, stimulus check studies, and so forth. So that is the facts, all right? So then what I thought is, well, once those excess checks stop, okay, and households' savings accounts start getting depleted, you're going to see people forced back to work. Even though everybody says the jobs stink and the pay stink and the environment stink and everything else, you got to make money, all right? So we saw numbers today that showed double what the economists expected. I was calling that, okay? So I've called that I've called the Fed tapering, which they came out a year ago and said they're not going to taper until 2023. So I called that. And now I'm calling the housing market to stabilize, not crash, not continue at an 18, 20% tick, but start to stabilize. Maybe we'll have 3, 4, 5% normals. Well, maybe not for this first quarter of 2022, but over the next year, I'm predicting by the end of 2022, you're going to see house values up about 8% throughout the country. Okay, about half of where we were in 2021. So that's my layout for this year. So that's basically, I just want to give you the jobs reports. Now, how is all this affecting the markets that we focus on? So let's get over to the MBS market. Here's our new format. MBS market is down 5. I am completely surprised about that because with this robust of a number, you would expect the markets to say, okay, that growth is back in employment. So now it means the economy is going to start ticking a little bit better. So when that happens, again, remember all this, the one thing I can try to teach you is when the economy is solid, everything's clicking, everything is good, you're going to have a robust stock market and a terrible bond market. And you're going to see mortgage rates go up, okay, from here into normal levels. What are the normal levels? Well, I don't know. We have this coronavirus thing that's going to be here forever, I think. And will we ever get back to normal? I hope so. But those are the upticks that I got. So let's get on to, I'll quit rambling. Let's go over to where mortgage rates are going. So this number is down 5 ticks, not doing anything. So guys, this doesn't mean your rate's going to go up 5 basis points or whatever. What this is it's the price of the bond and its effect on the yield. So let me tie this up for you. So mortgage-backed securities or mortgages are tied to, or the mortgage rate is tied to mortgage-backed securities. That is the component that is the biggest factor component in your mortgage rate, okay? So when the price, as we see here, goes down, so the price of the bond goes down, it pushes up the yield, okay? So because we're down 5 basis points or 0.05 doesn't mean the rate's going up, 0.05 or whatever. It just is telling us what's happening to the price of the bond. So prices go down, rates go up. Okay, so focus on that right now. So we're seeing a down 5. Pretty good. I'll take that, especially with this robust number that we just came out with. But let's get into the next thing is where are rates? So these are where rates open for today, okay? And here's where we're at. I'll explain this to you across the board. I hope this is a little bit better format for you to read. So the 30-year fixed rate. So any fixed rate on a conventional or conforming loan throughout the country, the average is 3.35. It is up 0.06, which we reference as 6 basis points. Okay, the 15-year is at 2.7, up 6 basis points. FHA is 2.98, up 6 basis points. The 30-year jumbo, 3.24, up 6 basis points. Nice little constant right there. Nice, huh? You can see, though, the 5-year ARM is affected. ARM rates are affected differently from the MBS market. Most of them are tied to LIBOR, coffee, prime, a whole bunch of other things. And I'll do a video on that. A lot of people are asking about that. Please, guys, right now in this environment today, don't do an adjustable rate. Okay, I'll ask you that. A year or 2 or 3 from now might be a good choice for you. It is really volatile too. Look, the rate on a 5-year ARM is 40 basis points higher than a 30-year fixed. Why would you do that? Okay, it makes no sense. So these are the national averages out there in the country. Now, there's other data that you can find here. So I'm going to start sharing this with you. This is posted by Mortgage News Daily. You can find all this information there. The value of my channel is I use this as one of my tools, and it gives you all kind of stuff. So if you're a realtor out there, you're a mortgage person out there, you're interested in this stuff, go to Mortgage News Daily and then just check out all the features that they have. I'm not paid by them. I use their feature plus many, many more. So I'm going to start dissecting in on a lot of these areas to help you guys understand this in more detail. That is it for right now. So I'll post later today in regards to what the market ended at and where I see things going. But right now, I just wanted to post the Mortgage News Daily reports where the national mortgage averages are out there. So you just had those. So if you find value in my channel, please don't forget to give me a thumbs up, subscribe down below. If you're out there looking for a mortgage, if you're looking to build, buy, refinance, cash out, streamline refinances, you're in a forbearance and you need help getting out of that thing, please give us a call. The best way to do that is All the information is up at the top. You can reach us at 844-775-5626. Or what we like to do is, if you can't call us just because how you work, your schedule, whatever, schedule a meeting. Just click that button and it'll open up our calendar, let you guys know what days and times we have available. Then we'll reach out to you at that time via Zoom or by phone call to answer any and all questions that you have. So thank you so much for watching, guys. God bless. I'll see you later this afternoon.